Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. How can we turn $40,000 into $280,000 and then turn that into an $878,000 difference on the balance sheet? I'll tell you how we did it. My mother-in-law bought her long-term care insurance policy in 2006. Over 11 years, she paid a little less than $40,000 in premiums for her policy. And then she needed care. And like most long-term care insurance policies, when she needed care, the premiums stopped. She was on claim for about 4 years and received a little more than $280,000 in benefits from her policy before passing away. Would she have been better off just investing the money instead of paying the premiums to an insurance company? The $40,000 of premiums, which turned into $280,000 of benefits, increased her net worth by about $878,522. How did we do that? Well, one example is this. Over 4 years, we invested $312,700 of her income into high-quality dividend-paying stocks. They had grown from $312,700 to $442,522. She was cash flow positive, over $5,000 every month. We invested that extra income into more dividend-paying stocks. The day after she died, we liquidated the stocks. The one rental property she did not sell lost some value when she first moved into the assisted living facility. Fortunately, we did not have to sell it at that time during that down market. And then during the pandemic, it lost more value. Again, we didn't have to sell it because we didn't need the money to pay for her care. Overall, it ended up gaining. That one rental property ended up gaining $185,000 from the time she moved into the assisted living facility until we sold it shortly after her death. If we had been forced to sell that property early on, she would have missed that $185,000 gain. Most of this gain occurred in the 12 months before she passed away. We were able to postpone selling that property because she had guaranteed income from her long-term care insurance policy every month. We avoided even more capital gains tax by waiting until she passed away to sell her stocks and her last rental property. Since we did not have to sell the last rental property or the stocks before she died, we saved about $51,000 more in federal and state capital gains taxes because of the step up in basis upon her death. When you add the capital gains tax savings, the dividend income from the stocks, capital appreciation on the stocks, and the property value increases, the $40,000 of long-term care insurance premiums turned into $280,000 of long-term care insurance benefits, which increased her net worth by over $878,000. Now, here's the question. What if she had not purchased long-term care insurance? What would happen? Well, if she had not purchased long-term care insurance, we would have had to liquidate her rental properties early on. We would have had to pay huge capital gains taxes, and then we would have had to invest the money very conservatively. We would not have been able to afford to lose any of her principal. She would have ended up on Medicaid if she lived long enough, and that was something we did not want to see happen. The Medicaid facilities in our area were horrible compared to the private pay facilities. Our goal was for her to have the best care possible, and thankfully, that's what she got. So here's a breakdown. We saved $200,000 in capital gains taxes from not having to sell the 2 smaller rental properties. We invested $312,000 from her excess monthly income and from the sale of the rental properties, since her long-term care insurance covered the full cost of her care every month. We got $129,822 in stock dividends and stock appreciation, $185,000 increase in the value of the largest rental property, $51,000 saved in capital gains taxes by not having to sell any of the stocks or the rental property until after she passed away. The long-term care insurance, which cost about $40,000, ended up having nearly a $900,000 net positive effect, which greatly benefited her heirs. And this is just the financial benefits of the insurance. There were many other intangible benefits. It greatly reduced the emotional stress, and it greatly reduced any family stress that often comes with providing care.